Welcome to TradeTheNBI.com. This is John. This report is for the 18th, and well, we're just keep plugging away. You can see ABM's continuing to rise, moving along with it. We finally did get the orange moving out of the middle zone here, which means we can probably begin to look for a little bit more activity. We saw shorts fading off a little bit on this. We've also had short-term buyers fading into the setup, but mid-term buyers have picked it up now. Unfortunately, we're seeing a rejection at that peak mode. Last time that happened, that was this kind of move here, so we've got to be cautious of that one. The last time, though, it instituted, we had significant shorts moving into it, not out of the market. Now, obviously, that can turn around, but a little bit less concerned when you see shorts fading into the situation. The problem for the longs is, though, it doesn't give you fuel to drive price higher, and you need that fuel. So we can see the NASDAQ catching back up after some overtures are being made. Obviously, now you're seeing articles of Apple may make phones in the U.S., and a lot of conciliatory stuff, and that's just to be normal. But the reality is, even if you want to be afraid of it all, it's not going to impact things all that dramatically, as much as they like to get all tweaked and scared. It always cracks me up to see that happen. Dow, right up at the peaks, looking decent. The problem, though, in this case, we had the beautiful cyan below red, which always is an indication of a long, and just about to cross there. At the same time, you've got midterm buyers. Short-term buyers have already reset completely, so that turnaround there would give the next impetus for the Dow. So you're going to get a little consolidation. The euro, all the way, wow, we broke all the way to 105 range, 105.8. Still not looking attractive, and in fact, about to move in from a daily standpoint to the zone between the red and cyan DOC with orange caught in the middle. Usually is continuation. It's been a pretty dramatic move for the euro. Doesn't look to get much better. Speaking of which, bonds, I mean, from way up here in the 140s, we talked about short. We had a secondary one that was a little bit lower down here, and like I said, it's a complex one going forward, because while we have this negative impulse at this particular point, there's no guarantee that some of the policies are going to generate inflation, because I've always talked about the tri-stool, that supports what's been going on for the last decade is, the influx of inexpensive labor to keep wages down. Number two, you had lowering of oil prices, and no growth policy has really maintained a nice trifecta of keeping inflation under I would say wraps for the most part. In fact, the battle's been more about deflationary pressures going forward. The no growth, though, certainly has its socioeconomic impact, and I think that some of that was relayed in the election, because when you do that, as they've been doing for the last decade, to maintain these massive budget deficits, and that the problem with it comes in that you have suffering in the sense that you have the largest labor non-participation rate ever, even though you see these wonderful unemployment numbers. And that's kind of a joke when you have this many people that can work and don't. There's some malaise out there, and turning on that spigot of oil, it's going to keep pressure on USO indefinitely. Gold, I'm not going to see any particular spike. I know the general rationale is that it should lead to some inflation with a ramp up of the economy. It's going to take some time for that to happen, and then you also have to see whether or not there really is going to be a squeeze in labor, because if you have that many people who aren't working, can work, and then all of a sudden jobs start becoming available, you have a changing dynamic where you do have sufficient labor to meet that demand. Whether it's going to need to be trained, tooled in that, those are other lags that are going to cause bottlenecks in that. So it's going to be some fits and starts, so I don't think it's all one directional. Here you go, 5K. ABMs, it put in the short right here as we peaked on through around the 83 range. Hasn't really dropped a whole lot. Not surprising. We're still positive shakeout for the most part. Just a little bit of a reset here. So all in all, that's pretty decent from this standpoint. And you notice the orange has stayed outside the range quite a bit. It came in just for a brief moment. That led to a little bit of the decay and back in it again, but it looks like it may reset and present a new buy right down at the bottom. That would shoot us closer to that 22 range. on par with the expectations, though, for start of a new year. We look at the euro again from a 5K standpoint. Look at how nice that's been. Just a straight downhill, keeping right in that middle zone there for continuation, right at 106 at this particular moment. All good stuff. As always, though, continue to look for me on the Skype chat. We keep going over some of the different setups as they pop up. But I think things are going to start to normalize going into the next week, and I think we can look for a little bit more even action in the sense that you're going to get some volatility going into holiday weekend kind of stuff. So that's typically what we would look forward to. As always, though, trade well. We'll talk in later.